All right, so we've been living in a high interest rate economy for a while now. The average home prices in the US right now are still as high as August 2022 or almost 10 months ago. So let me show you this, okay? And as of April 2023, the median sale price here is at $407,415, and it has been climbing since January from 381,000 $994 to $407,000. The year over year number is still down by 4.1%, but it's still not down as much as many people, including myself, had predicted. And if I click on the number of homes sold here, okay, number of homes sold, it is still down about 25% year over year. But if you look at the numbers since January, the number of homes sold has increased from 277,000 to 477,000 in March, and then dropped to 412,000 in April. The home data for May should come out in a few days. So why is this happening when the average mortgage rates have been between on the average of 6% and 7%? The real reason is the inventory level. Now, you have to keep in mind that the housing market will depend on the demand and inventory based on the city and town. There are cities like Tampa that are still considered one of the hottest housing markets. So if you look at the number of newly listed homes under the US housing supply, this number is very low if you compare it to the previous year and the year before. Okay. So typically people list their homes in summer because that's when people move the most. And if you look at the winter months for the last 5 years, every single year in November, December, and January, those numbers always dip because of the holiday season. And I always say that winter months are always the best months to buy a house, but the worst time to sell a house. But what's really alarming is that the number of homes that are listed in April and May has always been around 700,000 or 800,000. But this year, we're only seeing a little over 500,000. So, what this tells me is that people are choosing to hold on to their homes with a really low interest rate that they locked in at 2.5 or 3% back in 2020 and 2021. Let me know in the comment section down below what your mortgage rates are. Okay. And I'm in the same boat because I refinanced my home to a 2.9% 30-year fixed mortgage rate at the end of 2020. And I bought this house back in 2014 for $180,000. And there's no way I can find a house with this price in 2023. But do I want to move out of my current house with a $800 mortgage payment and move into a house with a 7% interest rate paying like something like a $2,000 mortgage payment? Most likely not, right? And I would need to have a significant down payment of 30% or even 40% to reduce the mortgage payment. And if you're not ready to buy a house, do not buy a house. And I understand that not everyone's situation is the same. The rental prices in your area might be similar to your mortgage payments. And I totally get that. When you rent, you're not going to be able to enjoy tax deductions, and your rent will likely grow from year to year. And renting in the long term is basically wasting money, but renting in the short term is smart if you have debt or don't have the cash flow to make your mortgage payments. What you don't want to do is buy a house by taking out a mortgage without properly planning for it. And I always suggest limiting your mortgage payment to 25% of your gross monthly income. And if you pay more than 25% of your monthly income, then you're going to have a very hard time saving or investing money. It's going to be mathematically difficult. And by no means am I discouraging you from buying a house. Again, if you're ready to buy a house with a mortgage payment that's less than 25% of your gross income, I would say go for it. But you want to make sure that's the house you want to live in and stay in for the next 7 years or longer. You also don't want to overpay for your house, or you're not going to have any room to invest in your retirement. So let me know in the comment section down below what your thoughts are on the real estate market in a high interest rate economy.